I discussed the euro and how I definitely prefer the short side on the euro against the US dollar, because let's compare economic heat map of Europe to economic heat map of US. The US got a lot of blue here, right? Inflation's cool. I guess that's not necessarily bullish for the dollar, but it kind of bodes well for the US economy. If you're asking me, am I favoring US or Europe in terms of the economy, like most analysts, traders, and investors, I am going to pick the US, right? Because that's where the growth is. That's where the strength is. You have this really disappointing slow growth in Europe. Meanwhile, other places like the US are seeing some pretty sizable growth overall. So if I look at euro dollar as we fill the gap here, I'm going to take the most likely scenario being lower prices for the euro against the US dollar. So I like that setup. I've mentioned that I wouldn't mind waiting for a retest of resistance here, but that if we get that 1.05 level, could be an interesting scenario for a short side setup for me on the euro against the US dollar. And I know that looks kind of like a trend line breakout, but you guys know how I feel about trend lines if you watch me regularly. I use them, but I don't really use them. Like, I just draw them because they are fun, but trend lines are really subjective. Like, I could draw this trend line to this, right? Or I could draw a trend line, through the bodies only. The thing is, when you draw trend lines, you can draw them many different ways. So they're a bit subjective, like most technical analysis, to be completely fair. But for me personally, I see more clear resistance at this 1.05. If we do get a rally up into that area from these oversold levels, I do think that there is more downside for the euro. That would be a trade idea that I like on the euro US dollar. Dollar index also big reversal intraday. I think we started out the day yesterday and it was like tariffs on Canada, tariffs on Mexico, and by the end of the day, both countries and Trump were at the negotiation table, and so they pushed out those tariffs until 30 days later, and the market said, okay, let's not freak out and let's kind of reconsider everything. So yeah, I mean, it is absolutely a very volatile market, with the dollar index making that kind of move in a single day. And also gold near record highs. Is it at highs? It is. It's at highs. 28.38 for gold. We got another day of all-time highs on the price of gold. Breaking out here looks really strong. And I think that this just plays into the uncertainty factor that we just discussed. Markets are trying to figure out, look, we've got tariffs. We don't know where they're going. We don't know when they stop. We don't know how long they're going to be in play. We don't know if this is just a negotiation thing by Trump, or if this is truly, the new paradigm where the U.S. goes back into massive, tariffs, and how does that actually impact the economy? Could it be a net negative? There's so many unknowns. And I think that what happens is people, when they have a bunch of unknowns, they go rushing into gold. I personally don't love it for the long side. I don't have what I would say is the right reasons for me to look to get long. If this was all red, that would signal to me, okay, I want to be more risk off truly and more bullish on gold. But right now, gold is doing its thing. It's making crazy moves. This thing could rip through the highs and just keep going, or it could reverse sharply. But I'm not looking to buy. I just want to be clear. I'm not looking to buy this dip on gold at this time. It's not that I am bearish on gold. I am decisively neutral. So if I go take a look at the score that we have on gold, we literally have a +0 neutral reading on gold. Now, momentum certainly favors the bulls, don't get me wrong, but I don't trade solely off of momentum. I trade based on the fundamental reading. So if I go pull up the gold tracker here, what you can see is that, yes, we've got some things that are positive for gold, like seasonality. Month of January is very strong for gold. Trend is clearly to the upside. GDP came in a little bit weak for the US compared to forecast. So those are some positives for the price of gold, but we can't ignore the negatives. Retail sentiment is actually quite bearish. Quite bullish on gold. I want to show you something too, because this is really quite important as well. So if I show you something, and we go take a look at, where's our put to call ratio? We recently changed the way we do this. So we now use options volume to get a way more accurate perspective of retail positioning on gold. Now, what I mean by this is that we used to use CFD brokerage data to try and interpret retail sentiment. The issue is that there's a lot of flaws in doing that, and it's lower volume relative to something like the options market, where there's massive daily volume and we can accurately track what sentiment is like on gold. Look, the reality here is that we have reached the extreme greed or high call demand levels on gold. Now, this does not mean, oh, get out there and short gold, because sentiment can remain stretched for some time. But I want you to pay attention to what this put to call ratio is telling you. This is telling you that people on the options market, you may or may not have known this, but you can buy calls or puts on gold. It's a way to put up a small amount of capital in order to leverage and make big gains or big losses on options, the options market. And you can trade gold on there. Well, look, right now, what this is telling you, what the put to call ratio that we use for retail sentiment is telling you, is that people have no interest in buying puts on gold. Everybody is hitting the call button. That seems to be kind of the equation here. The concept here for the put to call ratio when selecting for gold is there is huge demand for calls. The lower this gets, the more stretched and more bullish the crowd is becoming. So again, when we see gold hitting all-time highs, is that something I want to sell? No, not necessarily. But do I want to buy it when everybody's chasing it? No, right? So again, what does that suggest for gold? It suggests for me neutrality. I'm going to stay on the sidelines. I'm not going to chase this thing. Everybody's already buying calls that wants to buy them. So everybody is getting long gold at these levels. It does not mean that gold can't keep going. It just means for me, the risk to reward is not quite attractive enough at these levels. Now, if you get something like this and then it swings back and we pull up our chart once more, right? We pull up this chart and it says, oh, now we're swinging back the other way. We're back in a healthy range. Then I might look for some gold bullishness as long as we have some, other contributing factors.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
If anyone watching this remembers when I was working on euro-dollar shorts back in August, September, this is how I go about doing fundamental analysis. When I'm looking for something long-term, it starts when you're building a house. It starts with like the ugly foundations, which is this, where I'm just drawing up some reasons, some basic things that could support the ideas. So the idea is that we're going to get CAD Swiss bearish. So the reason we've got CAD is obviously we just had tariffs on Canada, 25% tariffs. The US makes up 75% of the Canadian trade. We've got a labor shortage, high household debt, slowing growth. We've got the Bank of Canada is currently aggressively cutting rates. They've already cut 50 basis points. Oh, sorry, that was a Swiss. Yeah, sorry, they've already cut 25 basis points. The tariffs could force them to cut even more. So that gives us quite a nice central bank divergence between the Bank of Japan and also the Fed. So we've got that. We've got the Swiss. So we've got the Swiss National Bank is on an easing cycle. They've already cut 50 basis points. And again, it's likely they'll be looking to cut more as we get further into 2025. There's even been talks of possible negative rates, which, that is just talk as far as I'm aware for now. So that's not a huge driver for the trade idea, but it's something to keep in mind. But that rate cutting really affects long-term appeal for investors. We've also got, again, weak economic growth coming out of Switzerland. Now, I'll get onto why that's a possible trade idea pretty shortly. The US dollar bullish, I won't go into too much. I think we speak about the dollar quite often on the show. The yen also presenting possibly quite a nice divergence in central banks. They're slow, but they are on a path to sort of normalizing their policy or their rates. So that again does present some possible divergence. We've got US tariffs also potentially leading to some more risk-off moves, which will benefit the yen. Now, the bit I was going to come back to, the risk-off sentiment. The reason that I'm not talking about the Swiss is because if you're an investor and you're looking and you're in a risk-off period, you've got gold, you've got the yen, you've got the Swiss, and a couple of other things, but we're focusing on these ones for now. The Swiss will be really the last choice, because even when you're looking at trades, it's not just risk off, go to all risk off assets. It's the same with risk on. You still need to look for what's outperforming, what's the best choice. In this situation, I think the Swiss would be the worst choice. So the yen, in my opinion, is bound to outperform the Swiss. So, sorry, Nick, I'll just give you 1 second. So that leads me on to some trade ideas. I'll show the full amount when Nick's gone. I don't want to take too much of his time, but the first one I've actually executed on is dollar Swiss. Now, again, this is mainly driven by the central bank divergence that we're seeing. The Swiss fundamentals just aren't really enough for me to be optimistic about it. So I'm looking really to scale into this position. I've got an entry here on the weekly time frame, and I'm looking really just to see how it goes. This is stepping my foot in the water. If it doesn't work, I'll cut the position, no problem. If it does work and I start to see sentiment shifting, then I can start scaling in. I was talking to our analyst at Elite Traders last night, and he's got the same opinion. And it looks like what I'm currently looking at isn't really priced in, and it's something we could be quite early ahead of if we can catch into it.
Yeah, no, I like it. I mean, when the dollar Swiss idea especially is, I've been trading dollar Swiss quite a bit to the long side, and I like that concept a lot. I mean, when you talk about especially like the Japanese yen divergence between other central banks, that's an interesting one, right? You have Bank of Japan wants to hike rates, and most other G7 nations want to actually cut rates. So you've got this divergence, and if they get what they want and Western nations also get what they want, the yen theoretically should strengthen pretty substantially. You also have in there that Trump generally wants lower rates and a weaker dollar, so that could come into play. So yeah, it's really interesting. The dollar, will it be strong? Well, one thing also too that you mentioned is like the CAD versus the dollar specifically. And the Mexican peso, like the U.S. tariffs on those places, I would say likely hurt those places more than they do the U.S. It would potentially hurt the U.S. too, like the trade stuff. But I think the whole point, the negotiation stuff, is like the U.S. would hurt less. Like those tariffs could send Canada and Mexico sharply into a recession. So I think that there's a little bit of like dollar dominance, dollar strength there that could be exploited.
The trade ideas here, they're not something that I would, and I can't suggest anything anyway, I'm not regulated or licensed to, but it's not something I would say is really a good idea for the average retail trader to do, because these trades, so here we've got CAD yen, Swiss yen, dollar Swiss, they're not something that you can really do unless you've got, I'd say, at least 5 figures in capital, so at least 10,000 or more. And the reason is because if you're approaching it the same way I am here, where you've got a position sort of just placed, this isn't technicals, this is literally just placing the position to see how the market moves over the next couple of weeks. If it goes into drawdown, let's say, even if the market moves, I mean, this is a week time frame, comes down to the sort of previous weekly low, that's a 400 pip move. So if you're trying to risk 1% and you've got, $1,000 in your account, it's going to be very, very difficult. It's going to be very intensive So again, I'm more showing you this just to show some of the approach and some of the thought process that can go behind looking into longer term trades. So the one I'm really interested in actually is CAD yen and Swiss yen. I think they could both be great runners. I think CAD yen has got serious potential. As I said, we've got tariffs just placed on the Canadian dollar. Oh, sorry, not Canadian dollar, placed on Canada. And it's not going to be good. I think Canada's trying to retaliate in some way. I saw something about that. I've not read into it too much yet. But to be honest, I think things are looking pretty bleak out there. So I'm looking on the weekly timeframes for some sort of tactical positioning, not just yet. Potentially, if we can get to these previous weekly highs, again, I might just take an initial small risk position and just see how it goes. But yeah, this sort of stuff, as far as I can tell, it's just not priced in yet. The markets are still pretty high or relatively high, but I would expect some sort of move to the downside if we can see these ideas start to prevail into something. But anyway, guys, I know that was probably quite boring for some of you, but I think, again, showing some of the boring stuff is necessary sometimes. Sammy, I don't agree. I think euro-dollar is still bearish. I actually have a take profit down at parity now. I'm positioned for that, so I'm going to start scaling in. Babi, it's good to see you. Medi, unfortunately, my withdrawals take 24 hours, so I'll have to get a coffee tomorrow. Yeah, euro-dollar did have quite a strong move actually to the upside. Such a big deal out of it, and now the market doesn't care. But like, what are you talking about? UJ sideways, dollar yen. Yeah, I don't really have any interest in dollar yen. I think the yen long term has quite a bit of potential actually to gain some strength, but I'm also not really a bear on the US dollar. I'm actually more bullish on the US dollar at the moment. So I'm looking to buy the yen and buy the dollar. It means dollar yen's out of the question at this time. I don't think, or I don't know. I think a potential buy at this support level is reasonable, but again, for the way I'm looking at the markets at the moment, it's not something I'm interested in. So I've got these levels marked out here, obviously looking for the intervention sort of around 160 up to 165. So I'm just very cautious at the moment about the dollar yen, or the yen in general. Very informative. Interesting. Okay, well, I might make a video on that sort of stuff. So if people are bothered about going into more details about it, I can make a video. But again, I know it's not what everyone really cares about and not what everyone's here for. So I'll keep it kind of simple and short. UJ's tricky with fundamentals. Yeah, I agree. Tariffs delayed 30 days. Yeah, it's like Trump's trying to make us all bold. Did you see dollar Mexican peso? We saw here, really rough to trade. Really strong move to the upside, obviously, or spike, I should say, or gap, when we heard Trump was putting tariffs on Canada, China, Mexico. And then, yeah, he backed out and decided to do negotiations. And now it was actually really smart, to be honest, because now he's got Mexican forces at the border basically doing what he wants them to do. Retail sentiment is bullish on dollar right now. It's a problem with retail sentiment is an indicator, but it wouldn't put me off taking a trade. Because the thing is with retail sentiment, you don't know what timeframes are trading. You don't really know anything about it. Same with COT. It's good to get an idea, but it wouldn't necessarily put me off a trade or make me go into a trade either way. Okay, I'll do a video then. I'll make a video about these ideas, and I can get into more detail and break it down. Delayed tariff. what would be the effects? Well, I've already really seen the effects. The effect's kind of done. US dollar losing value, and counter currencies gaining value. Yeah, Bashi, I'm starting to go grey as well. My girlfriend keeps pulling grey hairs out of my head. I'm only 26. Euro dollar showing a bearish score of -6. Currently, I'm waiting for it to hit a key resistance level. Yeah.
SPX is up a little bit. We've got some directional push in here, about 30 points to the upside, coming back to fill this gap from Friday's close or close to it. It's going to make for an interesting move since we started the week off on a rough note, just like we did last week. So here was our, open last week. Let me change the color. So open last week, pushed up all week, and then tariff talk on Friday ended on a sour note. Still finished the week red. This week started off again on a rough note, working our way back up to fill the gap. Question now is, we have a high, lower high. How much effort do the bulls have to put in here? If the bulls can pull back and fill this gap, is that enough to say that the bears are then going to take back control, or is this going to pull all the way back up to hit the same tops again? I don't know. We have some earnings this morning that I want to take a look at. So I had a winner on Palantir. That was more than expected, which is perfect. So Palantir up to 105. This stock cannot be stopped. My ratio spreads is looking good for full profit, which is totally fine by me for April and May. I need a price to be above 91 or below 69. It's well above 91. And I closed out for max profit was $2. I closed out for $1.75. Now I could wait until Friday to grab that extra 25 cents. To me, I thought it's not worth it. So I took the return. It was about a 70% return on risk, which I'm totally happy with. So good stuff for Palantir. We had some other earnings that popped in overnight, which includes the following. We had PayPal overnight. We had Spotify overnight. PayPal is at 81. Let me check and see something here on PayPal. So PayPal. So it's trading around break even right now. That's fine. I'm going to see if we go a little bit lower. I need price to get below $80. Let me see if it will. So I'll put a chart alarm here. $80 if there's a push lower. Okay, we had Spotify. Spotify is now above $600, which would have been I didn't get filled on the trade. I was trying to get in for what I thought was a fair price, and I went like even 5 to 10 cents higher than the mid price that I was willing to expect, and I still didn't get the trade filled. So unfortunately, my earnings play on Spotify didn't get taken the way that I wanted, but price did go to the expected move. So I was looking for about a $50 move, and we ended up going about $54. So that's pretty good, enough to make it, make money on the directional move. The problem was I didn't get filled at the price that I wanted, so I opted out of this one. Pfizer. What does Pfizer have to do to stop looking like it sucks? So it's sitting here at COVID levels. It's sitting here in 2016 levels. We've got a nice solid level at 2024 lows. I don't know, man. Like, Pfizer, get with the program. Start making Ozempic, for crying out loud. Eli Lilly's doing it. They can't be stopped. Speaking of, Eli Lilly has earnings on Thursday, but Pfizer earnings, they beat top and bottom, and price is like, good for you guys. We don't care. So I'm still waiting. I'm hanging out. We'll see what happens. But that's Pfizer. What else? Pepsi. I'm just curious on Coke. Coke is at 63. I've got a covered call at 65. Speaking of Coca-Cola, let me check my covered calls on this one. Shares. Okay, I'm going to put another covered call in on my Coca-Cola trades. Double check my break evens. Coca-Cola, I own at 63.66. I'm looking at a repair trade. Let's go out like 30 to 45 days. Let me see if there's earnings on Coca-Cola. Earnings next week on the 11th. Okay, so I can maybe try to I'll try the 65 again. So if I go out, let's say 45 days to March, I get 84 cents. That's not bad. That's not bad at all. My break even is 63. I'll get 84 cents. That lowers my cost basis down to 63.66 minus 84 cents. Now I get it called away at 65. I make 218. That's a nice little repair on Coca-Cola. I'm cool with that. Okay, I'll do that. Actually, what I might do is put in a collar trade. Maybe. If I'm going to do a collar trade, I'm going to go out a little bit farther. So let me go, instead of March, let's go to April. That's 72 days out. Now I get $1 for the upside. It's a 19 delta. If we have any price appreciation, lower the cost basis by $1. And I don't know why the puts are showing that type of price. That's really odd. The put price, I've got a 57.50 that only cost me 52 cents. All right, this is going to be interesting how it fills. So if I had a sell call at 55 and a buy put at 57.50, that gives me upside and downside protection. That way, if the earnings come out negative, I can increase this put side from a 52 cent debit to maybe a 75 to $1 credit, so I can take some profit, lower the cost base a little bit more. Trying to think, and then I can look at rolling a little bit. But it's crazy, like the put side asks are way different, which I think is I don't know, it looks like the pricing is a little bit off. And then I have 0 bid prices on the put side, which is, if you want to sell covered calls on, or sell puts on Coke, you're not going to get any really premium for that. So is it worth that trade? I think it's worth having the protection just in case the thing drops lower. Dropping down to 57.50 would be a big move for Coca-Cola. This thing barely moves to the downside, but I could see us like jumping quickly on earnings down to $60 if that's enough of like a delta gamma move to get me some profit. Otherwise, let me see here. What's fair value on Coca-Cola? Okay, I mean, I'm not really looking to hang on to this longer term, but I'd like to see the stock go higher. 65 would be fine. Get it called away. I could see us getting back into the higher 60s. $66 to $67 is pretty fair, just based on the volatility. I don't know if we're gonna get there. So anyway, let me see this. I'm gonna go. I've got some exposure on this one. How many accounts have Coca-Cola? I think I have 5 or 6 accounts. 1, 2, 3, 4, 5, 6 accounts that have shares. Okay. 100 shares. If I put in the 65 by 57.50, see if I can get 70 cents credit out of that collar trade. See if I get 65 cents. That still lowers the cost basis. 65 is not filling. Come on. 60 cents. You son of a gun. 59? 59 cents. Okay. So that just got filled. I'm going to try to get all the accounts filled at 59 cents. That way we've got it protected as well as a covered call. So this is a 4/17 expiration collar. I have a 65 sell call. I have a 57.50 buy put. And let me see what that price just got filled at. So 59 cents credit. And the updated break even is 63.66 minus 59 cents, 63.07.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.